Yeah, you got to cut the market a little bit of slack right now. We're up almost 25% since the lows we hit in the middle of March. That's a pretty extensive rally just in a couple week period of time. I think right now the market is just kind of pausing and kind of taking in some of this because as much good news as we're getting about flattening the curve, the bottom line is we're still in the very early stages of getting out of this crisis, particularly as we start to think about what is the world going to look like when we actually get out of lockdown and try to restart the economy.
Well, that's the crisis that really is the one that we have to focus on beyond the public health crisis. That one may end before, we would hope, the economic crisis ends. But how we come out of that is another discussion completely, isn't it, Mike?
That's right. If you really think about this crisis, there's the immediate health crisis, which we're fighting and we're starting to win. We're seeing that in the flattening of the curve. But the second crisis is dealing with the economic fallout. And that's going to be a pronounced crisis. How long does the lockout actually take on? We're going into our fourth or fifth week here in New York. Well, in Wuhan, they were locked down for 10 weeks. And they're nowhere near back to normal. In other parts of the economy, it's going to seem a little bit easier. So the economic recovery is going to be uneven. The second key thing is the spillover effects that are going to be impacted. The Fed, by its extraordinary actions and stimulus coming from the U.S. government as well, stopped the bleeding in the middle of March from essentially the biggest days of panic. But the idea here is it's going to be spillover effects, there's going to be bankruptcies. That's going to have a toll. And the final one is the psychology of the consumer. An event like this is generation altering. There was a scar left after the financial crisis on millennials for risk taking that they still behave today when you look at their portfolios. They don't take as risky positions as you think they would based on their age. The same thing during the Great Depression. How that impacts consumers is going to be a tremendous undertaking as we start to reopen in the coming months.
I think you really nailed it there, Mike. I think the behavioral changes that may come both for investors and their willingness to take on higher levels of risk and for consumers, people going out. I'm sure there are going to be people who are going to still go to football games this fall, but maybe there won't be quite as many as in the past. Mike Labella, have a good and safe weekend.